Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and just really investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I have been experimenting with high yield strategies for about the past year and a half. And what I decided to do was take about 20 to 25% of my net worth and build what I call, a high yield all weather portfolio that has two goals. Goal number one is to provide enough income to pay my bills, as well as maintain and pay down my margin. Reasons for it: I want to spend time more time with my family, my kids, hobbies, traveling, doing things I want to do, and avoiding the 9 to 5. So please hit like and subscribe if you like what we're doing here at the channel. And please know that this is not investment advice, not now, not ever. So please do your own due diligence before making any investment decisions. So what I want to talk about today, a couple things. I did bring over 100,000, as I've been saying in past videos, actually closer to a little over 90,000. What I decided to do, I want to max out my iBond allocation for 2026. So I'm going to put the max that you can buy in iBonds, $10,000 into that this month. I'll probably do it later in the month, but didn't bring over that extra 10,000 so I can put it in there instead. So what I did, I made some changes since, since basically last week. And I decided to buy a Leaps call on ExxonMobil, 120 call. Again, I think oil is going to have a good 2026. It is my speculation play. So I added that into my USO $65 call that I bought a couple of weeks ago. And I also bought another put on QQQ, about 20% out of the money, just to match the other three buys I had on it already. And I bought another SPY Leaps put as well. Same thing, about 20% out of the money. That again is my crash protection for the portfolio. So I added KYLD. I bought 500 shares of KYLD today. I like what Curve's doing with this strategy. I wanted to wait until Robinhood brought down the margin maintenance on it to 25%. It was at 100% for the first month or two that it was out. But want to look at Curve today, what my goals are with it and why I added it. So I bought 500 shares, so around $10,000 to $11,000 in KYLD. This is their high income ETF. Okay. And what it is, I just consider it very similar to like an ULTI, right? ULTY, even an ULTI. I don't even know what they're going to call those because they're so similar. But what I found about it is the distribution is a little bit lower. They've been distributing about 38%. And I like the holdings. I like what they put in it. I feel like it's got some good diversification. As you can see the sectors here, it's got tech as the majority, obviously. If you want to have high volatility, I think across these high income ETFs, you probably have to have the majority of your exposure to technology. But it's got other, sectors as well. I like that piece of it. It's got gold miners. It's got silver miners, ETF exposure. Gold and silver, yeah, I don't think they're cheap anymore, but I think they'll continue to go up a little bit more before the bubble finally bursts. I don't think the massive sell-off that we saw in silver and platinum and palladium the past week is the end. I really don't. But I think I said in a past video that when things go parabolic, I get nervous. So I think it was hopefully a healthy correction in those markets. I don't care what it is. If it goes parabolic, I always say be careful, watch out. But they've also added, some of your meme stocks. You've got your AppLovin, you've got your Shopify, but you've also got Broadcom and Intel. And they've also got some exposure, not listed here, but they've got some exposure to Coinbase, AMD, I think Bitmine. So they've got some crypto exposure, which I don't mind getting, especially since crypto has really gone nowhere since its big sell-off, back in October. So I think where this is at. I think with the market, we didn't really get that monster Santa Claus rally, which I think is a good thing. I think that this market is very frothy. There's not a lot of value left. So to see it go sideways and kind of cool off, I think is a gift, right? So KYLD, I think what their exposure right now, the good diversification, the fact that they're yielding about 38% with a pretty consistent yield. They've been paying 16.5 cents per share since inception. So I really like that component of it. And I think what I'm going to do, I'm going to see how the 500 shares do throughout 2026. And the main goal, that 38% distribution, I'm just going to use that spread to maintain the margin. Okay. So as I've said before, typically I like to keep it right around anywhere from 10 to 30% of my margin. And my goal right now to kick off 2026 is to keep my margin at about 100, 105, 110,000, right around there. Right now it's a lot lower because I brought over that cash. I have not reinvested that cash, back into the strategy. And I'm going to be buying more YQQQ January 5th or 6th. I've got to look and see what date I can buy it again so that I don't trigger a wash sale. So I sold it in early December and I want to keep that loss for tax purposes. So same thing with ULTI, ULTY, and Salty. I want to see if the managers at YieldMax have really made a change with ULTI. Haven't been too pleased with Salty really either. Even with the markets going sideways and down, I feel like that ETF's been hit pretty hard. So we'll see. I haven't decided entirely on ULTI and Salty yet. I know I'm going to buy a big allocation to YQQQ, probably about 4,000 shares. And I'm looking to do that probably, like I said, end of this week, early next week, depending on the date I can buy it again. So my margin is going to stay down a little bit lower, which is fine by me. I'm not in a rush, but these are some of the changes, some of the goals I want to make for 2026. But I do want to up that high yield component while dollar cost averaging back into the all-weather component, right? So if you're new to the channel, TLTW and SGov serve as my short T-bill for SGov and long-term U.S. Treasury bond exposure. CRF is just my my closed-end fund that tracks the index and pays a pretty solid 17 to 18% distribution without a lot of NAV erosion. WPay and YMAX, they are my high yielders. These are going to experience, I think, significant NAV erosion, but I'm putting a little bit back into them every market day as well. Just like the other ones I'm mentioning here, reinvesting back into them daily. QDTE, QLDY, QQQI, those are my plays on the NASDAQ. I've got some high yielders there that pay weekly. QLDY pays twice a week. QQQI is my more conservative play, lower yield, but more upside when markets go up. XDTE, SPY-I are my S&P 500 exposures. Getting that 0DTE exposure through XDTE and then getting the more conservative yield through SPY-I. RDTE, just to get some of that Russell exposure, the small caps, get some growth in there. And then GDXY is my gold miner exposure, GLDY, IAUI, IGLD are my gold plays, the exposure to IAU and GLD. And then IYRI is my real estate piece that gets exposure to high yield REITs. And then again, KYLD is my newest ad here, and we'll see how it does. Love to hear your thoughts and comments if you're invested in it already, maybe some experiences you've had with it. But just watching it since it's been launched, I'm curious how it will do through 2026. So that's my goal with it there. What I want to do, I'm going to get a full update on Cash for Life here, just numbers, income, budgeting. I had a great comment the other day. Somebody wants to see a video on budgeting, investing in general, just how to go about that. So I'm going to do a video on that here, I think, over the next week or so. Again, what I do doesn't mean what you should do, but maybe just give you some ideas if you are new to investing or want to try different strategies. So I've said it before, I wouldn't put all of my net worth into a high yield strategy. Again, I did not, and I'm pretty sure I will not, but I do want a strategy that is at least yielding enough where I can pay my bills, maintain and pay down my margin, which again, I've said in the past videos that margin I think is a great tool. I think if margin is used wisely and responsibly, you can really boost your returns and boost your income without taking on a lot of risk. And I think at a very, good, interest rate. So right now I'm borrowing at 4.5%. As long as I'm staying over that $100,000 threshold, which I won't be for the next few days, but like I said, that's okay with me. So hope you guys have something from this video. Please hit like and subscribe, help support the channel. Have a great day.